Good morning, everybody, and welcome to the Morning Volatility Report. This is Andrew Giovinazzi, Chief Operating Officer, as I cough, of OptionPit.com, your home for options, volatility, and options trading and education. To that, we have our volatility trading course. We haven't had a lot of that lately, as I laugh, but you want to see how we do it, mark free webinar here. And for the cost of, remember, it's like an eighth on a 10 lot. You definitely will learn something about how volatility works in the current market in our webinar, November 7th. It's a Saturday from about 8:30 or 9:30 Eastern to 12:30 Eastern time. All right. With that, let's just go to what everybody wants to hear. It's amazing. Apple earnings, they were good, not enough to. They didn't. One of the few names, big names that did not trade, even get close to trading the straddle. We actually looked at a bunch of trades yesterday in it, and I don't think anything excited anybody. Mark even hated one, but still didn't look too bad. But for the most part, gold is rallying. I think on maybe the Fed not doing something. We'll know later today. Q's stuck, but stuck near, I believe. All right, what's our high here? The Qs are a breath away from their all-time highs. I mean, that's 0.5% or something, right? Less than 1%. Apple participating, Amazon participating, Google participating a little, Microsoft holding on. So you are getting kind of, a bit of a rally. The earnings were pretty good. They did not like the Twitter earnings, although it was trading around. I was trying to get stock below 27 last night. I could not buy any. But a little up from the lows. The earnings are good, but nobody liked the guidance. So what do we have today? All eyes on the Fed. And really, I'm looking to see if the Fed surprises. And if we don't see below 16 for the November future, I'm looking for 15.5 by Friday if the status quo holds. And other names, I think some volatility is starting to get very cheap in some of the individual names. We'll start looking at, I think it's almost time for time spreads again. VIX is starting to get into the lower end of the range. Time spreads in some individual names after earnings is going to start to look good. Possibly in a Yahoo, in an Amazon. There might be some vol to sell in Twitter because it's a potential takeover candidate, always looking for selling some put spreads there, maybe at the 25 level, something like that. So there are some things to do outside of volatility with a little bit of directional bias. The only thing I say that's the wild card is how the market responds to oil. We tried to find some oil to sell yesterday, just some volatility, and it's just hard to get enough premium in USO to sell something. But it looks like it's down. The oil volatility is down fractionally today. So there are some things to do. It looks like we kind of have a sliding market. It looks like it wants to slide up a little bit as opposed to sliding down. And the big tell for us is can we see VIX in the 13 handle? We haven't. It touched there briefly last week. And whatever caused all this, I'm still not sure those causes are over, but at least for right now, the market, volatility markets are getting very, very, what I would say, in kind of a normal condition, where you have contango everywhere. And again, just starting to look at what I would call more like a vanilla market. That doesn't mean we can't go crashing down at some point, but it's a little more vanilla, and vanilla markets have different types of trades, which we'll talk about today in our chat. But again, I'm starting to like time spreads, and there might be something too in Walgreens. They're buying. It was up $5 or $6 yesterday. It's down $6 today. I know they have earnings coming out. It could be something in there, and so there's plenty to look at today in the chat. All right, with that, I will see most of you a little later. All right.